got the rand trading around 6.95. We also had gold at a new all-time high of $1,312 an ounce this morning. Dollar at 135.80. So it really looks like this is a weak dollar story at this stage.
I think that's dead right, Stephen. Obviously we had some very disappointing figures out of the States yesterday afternoon. The housing and the consumer confidence didn't make for good reading. And that's heightened expectations that the Fed might need to enter into another round of quantitative easing. And of course that saw US Treasuries coming back into favour and stocks rallying, but the dollar was really punished and against all currencies, and the rand was no exception. The higher gold price also conducive to rand strength, although that correlation isn't as strong as it used to be. Higher gold prices definitely also conducive to a stronger rand. So at the moment, it's really a dollar story. I think that we're going to probably remain around these kind of levels. We've seen some big moves in our bond market already. We've had some more FDI potential inflows, speculation thereof coming through. But at the moment, it's just really taking our cue from that euro-dollar play, absolutely.
And of course, there is talk that the euro-dollar could go to 137. What do you think that the rand would do in response to that?
It would, well, against the dollar, it would continue to strengthen, and like what we see now against the euro, we've seen the rand kind of flatlining against the euro, weakening in fact slightly. So euro-dollar at those kind of levels could easily see dollar-rand down in the 780s.
If we cross over to the other side, to the 680s, cross over to the other side of the world, though, we had a Chinese HSBC PMI, so not the official figure, coming out and sitting at a 5-month high, 52.9 for September, and that's up from 51.9 in August. So it really looks like China is managing to engineer this soft landing.
It does indeed, Stephen, and I think this is the whole new paradigm that we find ourselves in. Obviously, deflationary fears in the West, and a strong demand for manufactured and commodity-related goods coming out of Asia. And that, I think, is resulting in some nice trade balance figures for countries like South Africa, the commodity-based currencies like the rand, like the Australian dollar, doing very nicely in that kind of environment and really exceeding their sort of purchasing power parity fair values. I think no one's really paying attention to that at this stage. It's all about whether or not the terms of trade, whether or not they're getting those exports away. And if China's buying them, then their currencies are going to remain underpinned. And I think that is definitely the case in South Africa as well as countries like Australia.
Of course, we're getting our own PMI out later this week, and of course we'll have a PMI out across the globe, also those ISM numbers coming out of the United States. What's your expectations on that front? Because the last PMI reading for South Africa, we had edged back up above that 50-point break-even level. Do you think we're going to maintain above that level?
I think it's going to be sticky to the top side for a couple of reasons. One is we've seen global demand remaining pretty thin, as is domestic demand, and of course the strong rand environment is not helping. We are seeing some of the manufacturers actually now importing from abroad because of the strong rand environment, which is pricing out a kind of some of the local manufacturers. So there's an interesting kind of cat and mouse game going on at the moment, but I think the underlying story is weak demand domestically and abroad within the context of a robust rand. I think it's going to be difficult for the manufacturing to shoot the lights out going forward, and that probably is a concern for the authorities, especially from a job creation front.
Of course, that robust rand has been helping our inflation. We're getting CPI numbers out a little later this morning. The reading was 3.7% in July. What's your forecast for August? What are we expecting there, Michael?
Now, Stephen, we bang on 3.7% again for this month. The market consensus is a 3.6% year-on-year growth rate. So, we're marginally more hawkish than the rest of the market. Bottom line is we had a 10-cent litre decrease in the petrol price. That will help mitigate kind of any renewed inflationary pressures. We've got this strong rand, but on the flip side, on the negative side, of course, we've got administrative price pressures still coming through. So inflation is still comfortably within the target range, and I think if the number does surprise the downside, as it has in previous months, then of course expectations of another interest rate cut are probably going to intensify for the November MPC meeting. It's not our base case scenario, but obviously if the data continues to surprise to the downside, then we could very well have one more cut before the year's out.
Michael, we have to leave it there. Thank you very much for your time this morning.